Very good. Very good. So give us the top three things that jump out for you.
So Roy, I've been got a list that I wrote down.
The Elliott waves is a real key. And then trying to filter in these other indicators that we've been learning about as well.
Okay, so again, there's two of you talking there. So I'll just go with the last person that spoke, and then Polanco will come back to you. Who's this other person talking? Who's talking? Who said?
Jeff has been speaking. Jay Forge.
Jeff, how are you? Okay, so the Elliott waves are working for you.
Yes, they are.
And what else? What are you putting together with them?
Confirming with the indicators that Matt was showing us. I believe it's Matt on when he does the short-term trading.
Yeah.
But watching those as well for entry points.
Very good. And essentially, it's working for you. It's coming together for you.
It is.
And what are you? If you don't mind me asking, what type of trading amounts are you working with? Are you working with a small amount, or are you starting to test run it a little bit more?
I'm putting in a little bit more. It's still small. I mean, $700-800.
Yeah. Well, $700 or $800 is not that small. I was thinking of $10. That's small,
Well, that's where I started.
Oh, very good. Okay, so you went from 10, you're up to $700-800. Well, that's a big difference. That's a big difference. Very good. Okay, so it sounds like you're progressing along very well. So have you had a moment? Jeff? Have you had a time when the price action changes, the behavior changes? Have you gone through a change yet, and had to shift your trading a little bit? And we talked about
not yet. You mean like the trend changed to a bull market? Well, we're still in a bull market, but
yeah,
I've been doing everything with shorts basically.
Yes, but that's what I mean. Like there's a bit more volatility and volume coming back in now, so you can see it's going through more spurts and then it'll go sideways. Okay.
Right.
Okay. So probably the first big shift for you in the price will be when it properly turns, when the volume comes in.
Yes.
It'll be another test for you.
It will. Yes. I'll probably back out of the market and kind of watch that for a bit.
Yeah, and maybe bring the amount you're working with down a little bit for a little bit, Just for while you're testing the waters with it,
Right.
Yeah, very good. Okay, well, I'm delighted to hear that. That's what we're looking to get everybody achieving. So congratulations.
Thank you.
Delighted for you. How long, and Jeff, how long does it take you to get there?
Let's see, I joined this group in about the first part of December.
Okay, that's very good. Jesus, if it only took me that long to get there.
Well, actually, your advice has helped us have more risk management.
Yeah,
risk management.
Yeah, such a key thing to it. Yeah, very good. Okay, great. Thanks for the feedback, Jeff. Polanco, what were you saying? Because you had a run and then you got thrown, and then you're back in the win column more consistently. What was the difference between you getting thrown and then you finding a rhythm? What was it that you needed to figure out?
There was a few things. I've got a list of hard lessons learned and that I wrote down. The truth is, Roy, I lost like $30,000, man.
Ouch.
Um,
I've done
and
that. I've done that.
So what happened was when I started small. I was winning.
Yeah.
And then I went in on my first real trade, right? Put in a few grand and all this stuff.
Yeah.
I made like $7,000.
Very nice.
And the next trade I won like $2,000.
Okay.
And then the next trade I got liquidated, lost 13,000. So then at that point I started revenge trading and trying to gain that back, right? And I became very anxious and very stupid with the way that I went around about my trades, right? And became very just became very desperate, right?
Yeah. It's hard to pull back. It's hard to pull back in that way at times. It's hard to. Yeah.
So I just started losing, and I just got more and more pissed off. I kept throwing fuel in the fucking fire.
Yeah.
and I just don't learn my lesson. You know, I mean, I played semi-pro rugby. I boxed for 12 years. I was in the military for 10 years. All I know is pain, right? That's how I move forward. And finally, I got to a point where I almost didn't have any more money to play with, and I had no choice but to say, okay, it's survival now.
Yeah.
Slow down and let's take a look at the real things that are happening. So I learned, number one, I don't always need to be in a trade.
Yeah.
Like the price action isn't always there in a way that allows for you to be in a trade comfortably and actually be able to make money. That's number one. Number two, the trade from a position of strength, meaning enter a mountain peak or depending on where you're trying to, whether you're doing a short or a long, right? And in this case, obviously, being a short, since I've been mostly shorting. But really understanding those arcs and where we are in the arc, being patient, definitely trade on the larger time frames, right? So trade within the arc story and where we're at, kind of going back to the second lesson on the larger time frames, right?
Yeah.
And then learn to set some good stop losses. I don't get liquidated, right? I mean, it literally happened while I was asleep. But now I've won every single trade, and like yesterday I made like $2,000. The day before I made another $1,000, right? And so
Rockies.
Today I've been sitting on this short, and it's going to pay off, but it's also being comfortable with seeing the number right on my app being negative. Like, it's okay. It's gonna play out.
Yeah, absolutely.
And it's gonna go negative, but you just got to play it.
Yeah. Very good. Very good.
May I ask him a question?
Yeah, go on. Go for it.
Yeah. What were you doing? Like, I'm so conservative and so scared that I'm kind of like just doing, like 10, 10x or 5x. Do you mind sharing with the group? Because I think every trader goes through this, right? And this is what I'm afraid of. I'm now up to 22 wins, and I'm scared that I don't want to get too confident and too big headed and then lose it all, because that's what happens to most traders. Would you mind sharing with the group what you were doing? Were you 20x in 50x, 100x, or
I'm 20x. I've been 20xing. Is the truth. And it's part of my personality, and like you just pointed to it. You're a little bit more conservative and that kind of thing, and unfortunately, I'm a little bit more aggressive, and I've learned my lessons. But here's the thing: is I sit here and cry about how I lost 30 grand, where I can go back and make 60 grand. And it's up to me. Like I can sit here and wallow on my failure, or I can sit here and pull myself up from my pants and
absolutely. Oh, absolutely.
20x is high, Polanco. 20x is high. You're leveraging more risk there. It puts you in the red quicker.
Yes. For example, I was trading one night and it went totally the opposite way, and I did 5%, and then it kept going and going and going, and I'm like, oh no, I'm going to get liquidated. And thank God I only put 5% because it eventually stopped and started going the other way. Now 5% is not much, but I'm learning that these guys, they can fluctuate huge with scalp trading. They can fluctuate. So I'm gonna have a more risk management program that it's set up to where I don't get caught. And I know not all traders. Roy, I'm sure there's a percentage of losses, right? I mean, nobody gets 100%.
Yeah.
Do you know what the percentage is on scalping or not?
Yeah. No. I know. In general, you want to maintain. You want to maintain a certain the same. Like if you're going to use 20x all the time, or whatever you're going to use, is because you're looking for a consistency of at least seven wins out of 10. No, I personally, I think you can get more than that, but the generally what you're looking for is seven wins out of 10. You need more wins than losses. So the problem with switching things up is, and equally with the amounts. Like I trade in a price zone, and what I mean by that is if I'm starting off dollar costing in on 1,000, is I'll stay doing that, and then I'll dollar cost in, I'll load in more as I go along, but I might do anything from 5 to 10 of that. Like now I've increased that. What I'm trying to say is that I'll stick within that range of, I'll start with dollar costing in 1,000, and I'll do that in every trade, and I'll do 10x in every trade, because in that, if I win 7 out of 10, I'm making far more money than I'm losing. It only takes for me to mess up once where I'm doing 10xing on 1,000, and then one time I go, this is going to be an amazing trade. I'm going to 20x here, and I'm going to go in on 10,000. And if I lose that one, is then my 6 trades that I won, I get wiped out because I went crazy on one big trade, and that's the one I got caught in. So part of the consistency is stay on the same leverage, on the same amount, and get your consistency on that. Then if you're going to go up, well, then increase it, but then stay on that for a level, and then the more you win, okay, now I'm just using money I've already made rather than my own money, is okay, well, you increase it a little bit more. So you're incrementally increasing how much leverage you use, but you're able to measure your average out all the time, as opposed to the opposite is, I'll do 10x on this one for 10,000, and the next one I'll do 5x, but I'll do 20,000, and you're mixing and matching all the time. It's not a good thing to do, because you lose sight of your average. Obviously, you'll see it in the amount you're winning or losing, but you're losing that consistency of knowing where you are very clearly about your losses and your wins. So that's a really it's an important one to do as well, you know. And then you can incrementally see yourself increasing all the time as it goes along. And again, if it changes, this is another thing. Me saying, listen to guys, this is going to change now. Pull back a little bit and watch how you have to adapt. Yeah, God, if somebody just said that to me, I wish I'd heard that a half a dozen times at certain points, because going through the process, winning for a certain period of time, and then it switches up, and you're like, Jesus, what I was doing, what I was winning on is not working anymore. That can be frustrating to get caught in, you know. And you get wrecked. That's where I got wrecked a couple of times, where I was like Polanco, I was like, Jesus, there's not much more I can lose here, so I'm really going to have to pull back and tighten up, you know. And that's where the penny really dropped on me. I need to learn a trading system that I can trade regardless of price action and what it's doing. I need to have a set of boundaries that work in regardless of price action. So that's where the dollar costing in comes in. That's where the confluence with the arcs come in. And then equally just the consistency of have a strategy and stick to it, you know. But yeah, anybody else? Any interesting stories? Just with what's working for them or what's not working for them, generally.
Just to, I guess, explain kind of where I'm coming from. It's a little bit different. I'm not really using any. I'm not doing any leverage. I just, you know, I have a few hundred that I'm playing with, trying to apply, you know, everything that you're teaching, along with, you know, I have market cipher, so I'm trying to learn this indicator and learning the ribbons and arcs and everything. Just trying to put it all together into some sort of cohesive strategy, like you're just saying, that actually works.
Yeah.
And I think, like, right now, it's so weird because it's like, you know, I'm kind of hitting this hard all at once, so it's confusing as hell. But, you know, every day it gets a little clearer. I'm finding that the arcs are great for as far as you're like predicting, you know, hey, this thing is going to break out at some point, and then we just keep following it, and then we know, you know, kind of approximately when this thing is going to break out. As far as for like the steps, I'm really unclear. Just kind of, I've seen, you know, mountaintop second spike and all that.
Yeah.
But I'm still kind of unsure about those steps, and I'm not confident enough to, like, because I would eventually like to swing trade those. And then obviously get in, you know, after the breakdown, or get in right as it breaks up. So yeah, I mean, that's like the few hundred that I've been kind of playing with, and I'm losing because I don't have a strategy, so I've stopped and I'm just paper trading it at the moment. But I actually have a lump sum a lot in I had it in Ethereum a while ago, like in February. I got in February 2020, and had to ride that, and then got to see it go all the way down and lost like 25%.
Yeah.
So now it's really, I'm just trying. I think that I'm waiting to kind of reset my position, which is great because, like, right now I pulled out. I'm waiting for this drop down. I'm just gonna.
You must have got in when it was ETH was what, about $1,000 or something, was it?
Oh, it was ETH was
seven.
I think it was like mid 3,000s, and
okay.
I ended up getting in like later, like, because I kept averaging in like 5,000 here, 5,000 there.
Okay.
And it just kept going up, and I was so new at the point. I just kept throwing money at it, and I was just buying high. So then, you know, for that, I kind of just played around as much as I could, listened to as much as I could, and luckily didn't lose everything. And yeah, I mean, if I leveraged, I would have lost damn near all of it.
Yeah. But who are you, by the way?
This is Mark Anthony.
Oh yeah. Okay. Oh yeah, Anthony. Very good.
Yeah, I'm just trying to figure out like how. Basically, I'm trying to figure out my strategy to actually start winning because I mean my failure rate is like literally 10 out of 10. It's bad.
Yeah. I know
So
that.
I'm just paper trading until I can get that to
Well, I had
not.
Okay, I'm back, group. I'm sorry. I had to get a phone call. I missed everything.
Very good.
Sorry.
No problem. Yeah. Anthony, I'd market cipher. We were using market cipher for a few months as well, and we found it was good. It was good at one point because it looking for the dots, the red and the green dots helped us a bit, you know. But then when the market it got very inconsistent, is I think when the volatility, when the sideways and the volatility came in, market cipher's not very good when it comes to sideways, and I think when the RSIs get very like the RSIs are getting a bit unreliable at the moment because there's so many divergences and hidden divergences going on that they're not as reliable in ways, and I think market cipher sort of falls down a little bit there. And then I realized,
absolutely,
yeah,
I actually I just kind of saw like I completely agree with that. I was wondering your take on like this is a new development that I had of when the arc gets close to a breakout, I am unsure of like is it going to go up or down? I have no idea. That's where I kind of look at market cipher. I look at the estimated time that it should break up or down, and just kind of take a look at the momentum wave. It's really the main value I find in it.
Yeah, well, the confluence of the arcs is much more solid than, to be honest, the market cipher. With regards to if you got your arcs right, it'll tell you whether it's going up or
Also,
down.
your MAs and EMAs and your VWAP, right?
Yeah.
Tell you whether it's going to go up or down.
Yeah, absolutely. Yeah. But eventually, I came to a conclusion with market cipher that, is excuse me. If I had a basic understanding of indicators, if I could put enough of the indicators together and had a basic understanding, I would be better off. I'd be better off doing that rather than relying on market cipher, because it's not. And this is not just market cipher. This is any of the software. The software? It doesn't tell you when. Like that's the thing. Market cipher will give you a signal, but it doesn't tell you exactly when, how much to go in. It doesn't give you that clear signal about where exactly in price action to go in. Does that make sense? You just get the light coming on. And as much as you're reading the indicators there, it's not the same as reading the indicators yourself. So I found there was a bit too much reliance on the software doing the work. That I realized that if I understood those indicators for myself, is I'd have a far better precision time about what's going on in the price action, when exactly do I go in. So I gave it up. I gave it up, and I'm glad I did. I'm really glad I did, actually, because I was too reliant on it. And then when it became inconsistent, I was getting wrecked a lot on it. There you go. I know now they're doing they've got coaches with it, I believe. Somebody told me that. I think Matt told me that the other day. He did, actually. Yeah, is Market Cipher now? I think they have coaches on their website or something. And probably for that reason is too many people are buying it, but not enough people know how to read it. And I guarantee you that the coaches on it are now coaching people, not necessarily in Market Cipher, but in the indicators and how to read them, which are basically, training them how to use indicators, as opposed to specifically making sense of Market Cipher. Because until you know indicators, you're not actually going to understand Market Cipher. Does everybody understand do you get what I'm trying to say there?
I completely get it. Yeah, that's 100% right.
Yeah.
I must have missed this. What is Market Cipher?
Oh,
I must have missed this one.
It's a piece of software. It's a piece of software. So, but you'll find, and part of what I'm trying to say is that by the time you get that fundamental understanding of the enough indicators, you won't need Market Cipher. That's one of the things I found, is that we were relying less on it, so we wouldn't look at it because we found it a little bit of a distraction, because the indicators are giving us more refined detail, and then we were trying to layer Market Cipher into it, waiting for confirmation.
Are the indicators always right?
No, Market Cipher, no. But often, like more often than not, they are.
I meant the indicators. Are the indicators always right?
How do you mean? In general?
Well, if the indicators are all saying, for instance, if you're on the hour and it's red,
Yeah.
you're on the 30, it's red. You're on the 15, it's red. You're on the 5, it's red.
Yeah.
That would mean it's going down, right? All of a sudden, it goes up. The fifth candle is green, but all the indicators are saying it's down.
Yeah.
So that's why I'm asking if indicators are always right.
Well, that's the difference. Well, you see, the indicators. I'd say this way: the indicators don't lie. The price action never doesn't lie. That's the wonderful thing about it. If you take all the indicators out from them, just look at price action. Price action. I think I said this the other night, and it really struck me myself after I said it. There's no lies in it. Price action is just truth. It's telling you exactly where it is and what it's doing. It tells no lies. The indicators then map that out. Is when did the indicators not work? Is when they're not used correctly. When they're read incorrectly. So essentially, it's human error, and it's our interpretation.
But doesn't the market makers know exactly what these indicators are telling the truth and price action? And then we're all following exactly what that happens, and then they pump money into it, and all of a sudden it goes in opposite direction, or they dump money, and then all of a sudden it goes in opposite direction. That's why I'm asking. I'm trying to learn.
Yeah, totally. Yeah. Yes and no, because it's. If you notice, there's patterns, there's waves that it moves in. There's impulses and corrections. So when there's impulses, there has to be corrections. Is where people can misread it, is that something looks solid on the 5 minute or the 10 minute or the hour, but the price action is being controlled by the 4 hour. So the bigger wave is taken over and is in control. So what we think is going to happen in one moment doesn't happen, because let's say it keeps going. It doesn't turn around. It keeps going. It's because it's in the 4 hour. The 4 hour wave is in control of price action at that moment, not the hour. So it goes beyond what we anticipate it does. That's a misread. That's human error rather than indicator error. Is where we think it is and what we think it's going to do is incorrect. But the measurement, the 5 MA on an hour is telling you what it's doing. The 5 MA in a 4 hour is telling you what it's doing. Is that doesn't lie.
Let's say all the MAs are pointing down. Down. They're all pointing down. The 4 hours even pointing down. The day is pointing down.
Yeah.
And then all of a sudden there's a huge pump, and all these people get knocked out. And the reason why I'm saying this is, Insamo, you're in the group, right? Insamo and we got together and we're trying to think like the market makers. Yeah. What would we do to knock out people? Yeah. And so far I'm at 22 wins by going just the opposite of what I think that all the indicators are saying to do. I know it's a strange thing, But
no,
I just wonder if
no,
these trading companies or the exchanges, they
it's
got billions of dollars, and I
yeah,
don't see why they wouldn't spend a ton of money knowing every single indicator there is.
yeah,
And to me, I guess that I can see why you do longs,
yeah.
because the ABC correction or the Elliott waves, they don't lie. You're right. It's going to happen. And I think that's why a lot of people do longs, but then you pay that interest. You pay a % interest each day.
Yeah.
And I'm just trying to learn.
Yeah, well, a couple things of what you're saying is there's two ways you can approach the trading. Yeah, is you can trade it adversarially, which is what you're doing, which is not wrong. It's just your and what you're saying is that you're the way you describe it is you play the opposite to what the indicators say. What you're really doing there is you're swing trading. So you're catching the moment when it's swinging, and then you're going in as it swings. That's where you want to go. You want to catch the swing and go in on it. And the indicators are all giving you one direction until they turn. They go in the opposite direction. You're catching that and you're going in on that swing trade. That's what everybody should be looking for, is that you're going in on that. But and then you're adversarially describing it, which is fine as well, because it without a doubt, trading is everybody in many ways is against everybody else, because everybody's trading against everybody else. Like that is the truth of it. And there's winners and there's losers, and it is brutal. It is brutal when you think it can't go any more. It'll go just far enough to get you. And then it'll turn. It's bone crunching at times. But there's also another way to look at it, is you can see it as one continuous flow, where you're going with the flow and the ebb and flow of it, and in that you're catching the swings, and you're playing the center line, so you're seeing how it's all playing out, and then you're just going with it. So there isn't an adversary in that, other than yourself, other than your ability to follow the pattern and stay in the pattern, and then trade in that rhythm of the ebb and flow. So that's the two approaches. Both work, because what you're looking to do is swing trade, is catch the swing. So when you say that you're doing the opposite, you're not really doing the opposite. What you're doing is you're catching the moment before it swings and you're going in. Does that make sense?
Yes, yeah. I mean, I look at all the indicators,
Yeah,
and I study, and then I say to myself, okay, it looks to me like there's a lot of buyers coming in.
yeah.
What do I need to do to knock all these buyers out? That's what I do. I say it in my head. What would I do as an exchange company to knock out all these buyers?
Yeah.
And sure enough, boom, it goes exactly the way I thought it would.
Absolutely.
But it's swing trading.
That's from what I've observed, that's definitely true on the lower time frames, which can be shown in the volatility of the pricing, right? That's why you see so many different moves, and like you look at the RSI, it's like, oh, it's got to come up for a breather, or it's got to come back down, but there's a liquidity pool, and then the market makers just keep pushing it, right? And get that price. But I think what Roy's saying is, in the bigger picture, if you play that bigger picture, you're still going to play those predictive bigger waves. But when you zoom in there, right, you see all this volatility, which is what you're explaining, which is why it's probably working for you really well on the lower time frame scalping. Because I did that too. Yeah.
Yeah. Excuse me. The same. To be honest, the same approach would work on the higher time frames. The only difference is it plays out over a longer period of time with bigger moves. So you get used to doing it on the smaller time frame. It's like surfing a small wave. The same will work on a bigger wave, but the bigger wave takes longer. So you got to be able to stay focused for longer. You got to be able to look at it for longer. You got to be able to recognize the pattern, the same pattern, but over a bigger period of time, where there's more nooks and crannies. That's what I'm saying. If you try to read the 4 hour by looking at the 15-minute, is you get your head wrecked, because there'll be lots of twists and turns in the 50. Like, think about it, on a 4 hour range, and you're looking at it on the 15-minute, there's lots of twists and turns. But on the 15-minute, is you're looking at the swings, and you go, there's a swing, there's a swing, there's a swing, there's a swing. Okay, I'm going to shift up to swinging on the hour. Okay, great. But I'm going to keep looking at the 15-minute while I'm trying to swing the hour. Okay, well then, in the hour, you have a swing, and rather than a swing, just as an idea, rather than a swing every you're gonna trade the hour. So, but you're used to looking at the 15. So just as a simple thing, every 15 minutes there's a swing on the 15, and you're trading that 15. You say, okay, I'm going to do the hour. So now every hour there's a swing, just to keep it simple. But you're looking at the 15-minute. Is every time the 15-minute goes to a swing, you think, oh God, there's my trade. I'm going in on my hour trade. Where on a 15-minute, it will swing back and forward, but the trend is still going up. And at one point, at the top of that trend, it'll swing, and it'll swing a bigger swing, and that's the hour. Now that's going to swing, and that's going to go down for an hour. And then in that 15 minutes, in that next hour, it's up and down, but always in a downward direction. But it's swinging every 15 minutes within that. And this is where mentally it's a challenge, because you're trying to swing the hour, but you're looking at the 15. How do you know when the swing that is the 15, but equally it's also the hour? And that's where Confluence comes in. Is that you want to catch the swing that is the hour as well as the 15, and not just the 15. Because if you go in thinking, oh, this is the swing of the hour and it's only a 15, that's where you get caught. Because, oh my God, it keeps going up. I thought it was going to turn for the hour, but in the next 15 minutes it goes up again. Another 15 minutes it goes up again, and you're like, Jesus, when is this hour going to turn? And eventually it will, but you get caught because you're looking at the 15-minute, thinking you're following the hour. Does everybody get what I'm saying there?
Yes, very good. Yes,
and,
sir.
And that is a bit of a mind f. It's frustrating to shift to that. And again, that's one of those things where you've got your successful strategy, and then you're looking to go into those longer time frames, and your strategy catches you out. Again, that's where the Confluence comes in with the different arc timelines. So again, the willingness to pull back on the amount you trade, simply because you're shifting a gear. The price action is shifting a gear, or I'm shifting a gear in the way I'm going to trade. Is pull back until you get the consistency or the clarity in that. That's a really smart thing to do as well. And again, I wish I'd done it, because it costs less to learn when you're moving up a gear like that, so to speak. But trailer, yeah, you get what I was essentially saying about your what you're doing. What you're really describing there is you're catching the swing.
Yeah, I do get that. It's just I'm really interested in how many buyers are pouring in and how many are selling in liquidation areas. Yeah. That to me, and Matt helped me a lot with that, and that seems to be, that has helped me, along with the ARC system and the the Elliott waves.
Yeah.
That has helped me a tremendous amount. But I'm still training my mind to think, instead of thinking like a trader, I'm training my mind to think like an exchange company, because I look for what they're going to do to knock out as many people as possible. And I don't know, now I'm up to 22 wins, and I know eventually I'm not going to always get a great win. But the point is every time I do this, I think about what they're going to do, and it's just a different strategy. Because I mean, all these indicators, right? Billions of dollars or millions of dollars from all these indicators. Well, don't you think these exchanges know exactly what all these indicators are saying, and what buyers or what direction they're going? And I mean, they got bigger computers than we do. I'm sure they do. So, that's what my thought is anyway. I don't know if anybody else wants to chime in on that.
Yeah. Well, some people might say, rather than the exchanges, it's the smart money. It's the big money, the smart money that's in those exchanges.
Okay, big money, whales, market makers.
But it's the same. Yeah, that's what I'm saying. Yeah, that's the same. It's the same. It absolutely is. You could also just describe it as power. You could describe it as force. You could describe it that way as well, because that's essentially what people, the people with the big money are using their power, and are able to generate force.
You know how indicators help me, Roy? Yeah. They help me to know what the majority of traders are thinking.
Yeah, absolutely, yeah, for sure. And to be honest, now the majority of traders, they're pattern traders. They're pattern traders. They trade the patterns. I think that's where an awful lot of people get caught out, and then it's also why the majority of successful traders move into the hour and the 4 hour, because there's more consistency and confluence there. And when new people come in, it's easier to read the smaller time frames because it's more active, it's more busy. There's more opportunities to trade and learn, and you grow from that. But then it's graduating from that. It's a bit like anything. It's a bit like I'd say the military, and you're training people or any area of life. Is there's always, as you go through the grades and as you go through the process, is it filters people out. It filters people out. So if you look at all the traders that started in the month of January 2 years ago, is how many of them are still trading, and what was the process that they went through to be able to stay in the game and be in the marathon of trading, be in the consistency of it, as opposed to getting knocked out. There's a whole process and procedure there. It's like what's that word? What's that phrase? A rites of passage. there's a whole rites of passage and a lot of tests along the way, So yeah, something to think about.
I'm hoping I'm done with my rite of passage here this week. I'm done with rite of passage.
Yeah, well, some people's rites of passage is they need to sort of lose nearly all of it,
Yeah, well, I'm sure there's going to be some amazing Hollywood movie about a trader that failed and then comes back victorious. And I hope maybe it's about me.
Very good. Excuse me. Yeah, well, you're also you're cracking a joke, but you're actually describing part of the mentality needed to stay in this game. Is if you, like, again, my own thought as well is if you're going to do this, There's no pretendies. You can't pretend. You have to be 100% in it. I don't mean full time. Oh, you have to be full time in it. That's not what I mean. I mean, if you're going to do this, is you got to put yourself fully in it. Because if you don't, you will eventually get caught. You will get caught enough times that mentally you'll force yourself out of the market. Unless you've decided, I'm here, I'm not going anywhere, I'm going to take it all on, and I'm going to learn it, and I'm going to break it. And what I mean by that is that I'm going to learn how to be successful in this. Don't give yourself another choice, which is essentially not giving yourself a back door. Everybody know what I mean about back doors? I'll give you an example.
Yeah, no shortcuts. Just
no shortcuts. No way.
Be in the
only
yeah,
go.
Be in the on the journey, and take the scabs and take the wins, and go about it.
Yeah, and no.
You know what's
Go on.
What's really great is that this group is super amazing. Between you, the coaches, and then everyone else here that will call each other out on our TA, whether it's good or bad, and so that's why I find comfort in that, and I appreciate everyone's support for what it's worth.
Yeah, you're very welcome. Yeah, it is a super group for that. It is a super group. If you've been around a few servers, you'll realize how nice this group is with regards to support. No big egos messing around. So yeah, back to the no back doors. And like if you're in this and you've no escape, what would you do? If you've no escape, if you're here and there's no escape, if you've no escape and what you're doing isn't working, what is your only option? If what you're doing isn't working and there's no back doors, you can't escape, but what you're doing isn't working, what's your only option?
Run and make it work.
There you go. So adapt.
Cut your loss.
Yeah, adapt. You've no choice but to adapt. Where if you give yourself a back door, you'll only adapt enough until you say that's enough, and then you're out. Where if you're in it and you go, well, I'm in this, I'm not getting out of this at all. Well, then you'll adapt. You'll do what you need to do to learn what you need to learn to succeed in the way you need to succeed. And it's a very powerful way just to take your ego out of it. Where you dig in and you go, no, I'm just going to force this now, and get into that battle with yourself, which we all do at times. But then when you realize that it's not working, is you got to pull back, you got to adjust, you got to reset, and then you got to adapt. And that's where we talked about before about bringing in other indicators, but also bringing in different attitudes, different states of mind that you may need to bring in. And I always use the one as patience, because everybody resonates with patience very quickly. If you're not patient enough, well then adapt and be patient. And it's not like you don't have patience in you. So where in your life are you naturally patient? Go to that place, sit with that experience, be in that patience, and then take that state of mind and practice it while you're trading. Practice it while you're trading. If you find that your fear is getting the better of your anxiety, you get stressed, you get wound up, think about the time, a place where you're actually very calm, and think about go to that place and be calm, and then bring that calmness into your trading, and practice it while you're gone into the red. Practice being calm as a state of mind, because what's your option? You can't constantly be wound up all the time and stay in the game. It will eventually force you out. You'll eventually use your back door. You'll eventually go, I can't take this anymore, and you'll run for the door. But if there's no door there, well, then you're going to have to adapt. So it's as a mindset, there's real power in it, because what you're drawing on all the time is your own personal power, your resilience, your willingness to hold your ground and then be malleable, be adaptable in that. So somebody who's going to say something there?
Yeah, Roy.
Yep.
So can you give me your opinion? I'm just looking at ETH at the minute.
Yep.
So on the 15, it's just formed a little triangle.
Who's this? Who's this?
Sorry?
What's your name?
My name's Jake.
Jake. Hi, Jake.
Guys, only been to a few of your live sessions so far. I've been in it a little while.
Lockhart.
Yeah, it's just getting into the trading a bit more recently.
Very good. What are we asking there?
But personally, I feel like it looks like it's about to spill and drop. Just looking through the time frames.
Okay.
Is this? It looks like it's been rejected off the 50 on the 1 hour.
Okay.
And then it's also on the 15, it's made a little triangle, which is obviously bearish in a downtrend.
Okay.
Would you give your opinion on that? And where am I looking at that right?
Yeah, give us a look. We're segueing now. Very good segue there. Appreciate the segue. Let's have a quick look. Yeah. I'll pull up my ETH. Now we're gonna look at the arcs as well and talk through the different points in it. But let's have a quick look while you're asking about ETH. Let me just change my screen.
Currently looking for the short, that's all.
You see that screen there?
Yep.
Let me adapt this a little bit now. Yeah, it definitely looks like it's going to break soon. Although I said that earlier. How do I move this? Look at the yo-yo. Look at it. Last time it was here. There. Yeah, it's very close. It's very close. I was saying this earlier on that this retrace here might not go that high. It might not go that high because of where the price action is, and the MAs is it could be coming down. So let's have a quick look. Let's have a quick look at the moving averages. So that's the 1 hour. Let me just have a quick look at the 5 minute because that'll give me a quick look. What I'm looking for in a 5 minute is the most recent impulse. So there's an impulse, there's a correction, here's another impulse. Also a double top in it. So that was that double top we were looking at in the 5 minute. Let me go back to that then. Okay, that's that double top there. There's okay, so say what you were saying to me again, will you?
I was just having a look at it, that's all, and it looked like it was at a point, it was about to drop in price, and I just wondered if you agreed with the way I'm reading it correctly.
Yeah, well look, see this yellow line here? This yellow line is the VWAP.
Yep.
So generally when it breaks the VWAP and on the hour generally it's heading down, yeah. So you can see it here. You can see here it gave it a go and got rejected. Here it is coming back down on it again, yeah. It's also testing the 200, so there's the VWAP and there's the 200. Now I know when we go through the later time frames, there's also going to be more moving averages that it's testing here. So on the 15, actually, let me go back again to the 5. Okay, so look here with the RSI. So it's come down, it's got very close to the bottom. So it came down here, had a test, back up, came down here, had a test, and back up. It looks like it might need to go back up to the top of the RSI channel to come down and have a go again. So it's spiked through, but it's still not there yet. So now the question is, and it's back to this, is the question is how high does it need to go before it comes back down, has a go again, yeah?
Yeah.
Is let's say how high I was looking at this earlier on, and I don't think just looking at my eye is here will be mountain peak would be about here, our final peak will be about here. It wouldn't be much higher. So it's at 3.1 at the moment. Is if it was to go up, I can't see it getting past 3.27. I'm not even sure it's going to do that, because I do think that it's a much smaller one and then a breakthrough. So now I'm going to look to see the MAs that support what I just said there, yeah? So let's have a look. I'm going to flick through a couple of timelines. Here's the hour again. So here's 3 down, here's 2 up. Now it's having a good go at the 5 MA there. There's the 20. So you can see the what rejected it was the VWAP and the 20 MA. Look, there's the 5 coming down. There's the 20 EMA and there's the 10. If it gets past the 5, it probably won't get past the 10. Does it need to come all the way back up to the 50 here? Well, that would be that peak of the final bounce, yeah. Yeah, not final bounce, final peak, excuse me. Let's have a look at the 4 hour. So the 4 hour, you see, this is where you can see the price action is the higher time frames are really coming down and putting a lot of weight in the game, because you can see the 4 hour here. Look, the 4 hour went into the oversold a couple of times. Here is back up for a bit of breath. So it's telling you that, look, it's willing to go into the oversold on the 4 hour and keep pushing. So this is the, look, a bit of breath, go back down again. Here it is again. So the reason why it's here and it hasn't gone up, but it's gone like this for a couple of candles, is to allow the lower time frames to catch their breath. So if you go back to the hour, is look, it's allowing the hour to get back up here, so that it's giving it space to be able to have another dive down, which gives you an indication that it's willing to head down again. Like here's the 15 minute. See, now again a 15 minute. So it looks the 15 minute looks like it will want to go up and get a little bit more breath. But again, this is where the RSIs get. This is where the RSIs get a little bit unreliable. And what I mean by that is that the lower time frames, look at how they're starting to spend more time in the oversold. So so normally you go, look, it's going into the oversold. Okay, it's going to hit there, it's going to come up. But look how long it stayed in the oversold. So it's starting to stay longer in it. In the 5 minutes, you're going to see it even more, yeah. You can see it being held down. You can see it pushing over it. Although there is a little bit more, not too much to be honest. But you're starting to see that there's times when it goes into the oversold more often, and it's staying there. So it doesn't turn up as much. So now if you look at this here, is the 5 minute. Is I'd be sure waiting until the 5 minute gets up here. and let it go up here and let it turn again. So that would be one thing I'd definitely be waiting on. Now back to the 4 hour. Okay, so again, look, here's the if you look at the candles here, this one here, that's the top of an Elliott wave. This is the retrace back down. And again, so here's part of the retrace back down again. Here's the 5. Here's the 5 turned up. Here's the VWAP going sideways, and here's the 10 coming down. So basically what's going to happen here is that the 10 is coming down, is the 10 will put a pressure on, is the 5 will turn, and the 10 and the 5 will spill together. I reckon that's what's going to happen. Sometimes what happens is that the 5 will go like this, the 10 will go like that. It's like they created an X, you know, and then that creates more of a sideways action where you get the candles up and down. But if you were going to go in on a trade now, do you see the top of this one here? It's not going to break that, because this is an arc that's getting played out here. It won't break that before it goes down, I believe. So 3160. If you really wanted to be safe with it, is putting your stop loss or your liquidation up at 3.2, putting it above the 20 MA. So whatever your entry point is here, is you put your stop loss or your liquidation above the 20 MA on the 4 hour, and that should give you a bit of space for it to move in. But equally, is you can see the VWAP is getting set to go down. It's coming up to 12 o'clock, so most likely the VWAP will move to price action, and most likely, I'm pretty sure of it, is the VWAP will become a resistance line. So the VWAP becomes a resistance line, price action gets pushed below it, and then it finds its way down. There might be a little bit of a bit of volatility, that finding its way, but that will essentially what's going to happen. And then you'll get the spill, because look, the spill is already, on the 4 hour, the spill is already setting itself up. And there's the cusp of it, and it's just on the other side of it. So yeah, your reading of it is spot on, yeah. The question is that when are you going to go in, and your stop loss or your liquidation price is, if you go in too tight, is you can get knocked out, but still turning, but you get knocked out in the process. Because look at these spikes. These spikes are the volatility. This is the stuff that gets you knocked out. So I would suggest that.
I almost had that with Cardano this morning. It's scared me a bit, but just patience. I get quite hesitant to take money out, but I've had a few successful runs recently. It's just being patient is the key to it.
It is, and if your dollar cost in, let's say you put in a lot of money and you bring in your stop loss or your liquidation price up to 3.2, and you're like, Jesus, if I lost that's terrifying. I'm not, well then
heavy.
well then put in less. So
yeah,
put in less, get your position, put in a small amount, and pull your stop loss or your liquidation up to here, so that, and then you go, well, if I lost that, I can take that, so to speak, and then you wait and you let it turn, and even if it wants to come up here and test it, is you're still safe, and the amount is still you can handle it. Then I don't think it will come up this far at all, but now it turns and it starts to go down. Okay, when it starts to go down and you can see it clearly breaking below the VWAP, and price action is really moving, and you put a little bit more in, your dollar cost in, and it will pull your entry point down a little bit, but your price action is moving away already. So you're only putting real money in when you've got your position and price action is actively moving away from it, and that gives you the confidence to load more in, and you're not sweating it in this, going, oh my god, if this turns wrong for me, I'll get hammered. Do you get?
Hey Roy, you mind if I add a comment to that?
Yeah, go ahead. Yeah.
Yeah. So just to elaborate a little bit, and you guys, Roy always talks about bringing that stop loss up or bringing that liquidation up. Just specifically, when you enter the trade and you have the arc and you know where that skyline is, oftentimes a really good trick is, let's say you go in, I'm just going to use an example, $100 on ETH and it's 3,000 even, and you have a liquidation of, let's just say 3,100. If you're worried about it, and so you don't worry.
Matt, let me just give a visual on what you're saying there, because
exactly. And you know where I'm going with this.
Yeah, I do. Yeah, because look, there's 3,240.
Right.
There's 3,240.
So
there's 3,240. Look where it is on the arc on the 5 minute. So this is resistance peak. So even if this comes up, it's not going to break this.
Now the point I was just getting to was, yes, you could set your stop loss, but when we talk about, your liquidation and increasing that liquidation, for anyone who's not sure what that is or what that means or how it's done, it's by adding margin. So you're not adding to the position. What you're doing is you're adding margin to the position, just more money, and that increases that liquidation, so you can stay in the safe, in that safe zone. Now, as the price comes back down, you could remove that margin at any time, and you could also DCA in. And back to you, Roy. I'm sorry.
No, you're fine. I'm gonna again. Let's visually show, because what you're saying is really good, but it's hard. It's hard to follow if you're not seeing it, if you're not used to it.
Yes.
I'm just remembering my own memories of trying to get my head around margins and stuff. Can everybody see that there? I'm moving my mouse. Okay. So here's a trade I'm in. Yeah, this is again, this is how much I'm in it, but here's the position margin. So you click in here, what Matt is talking about. So you can change this. So let's say you've got $1,000 in, yeah, and your stop loss is you got $1,000 in, and your stop loss is at 3,100 on ETH now. Just say it's 3,100, and you got $1,000 in. Is rather than putting another 1,000 in on the trade, where you're doubling the amount of money you have on the trade, is what you do is you go into the position margin, and you might add in $500 here, and when you put in an extra $500 into the trade, it's used to move your liquidation price. So now, rather than having your liquidation price at 3,100, your liquidation price now moves to 3,150 or 3,200. So it moves your liquidation price. It doesn't increase the amount of money you have on the trade. You won't win any more money when you put money in the position trade. It's used to move your liquidation price. If you lose that money, but it allows you to move your liquidation price. That's the difference. Does everybody understand?
Roy, I posted, because you're in the inverse perpetual, it's slightly different.
Yeah.
In the general chat, I posted a screenshot of what it looks like for regular leverage.
Okay, but is the principle still the same?
Yeah. Yes, it is.
Okay. Well, what's different then?
No, it's same exact thing, except the screen looks different, right?
Okay.
Yes.
Okay.
It's a completely different screen, so so everyone else can follow along, because I believe the majority of everyone here is in a regular leverage trade, not an inverse.
Very good, very good. But that's my core point. Is the position margin here? Is you're putting money in to move your liquidation price. Again, is I don't recommend people do that. I don't recommend people do that unless you're familiar what you're doing, or that you've tested it in small amounts. So yeah, is you would need to test run this with small amounts and dollar cost in, because that's the way the strategy works. Loading in and then putting money in your margin is if you put a lot of money in, your margin isn't going to be moved unless you put a lot more money in, because the more money you have in, the more money it takes to move your margin. If you put a small amount of money in, then it doesn't take nearly as much to move your margin, and that's where it gives you it allows your remember, adaptability. Your range that price action can move with is far greater, so you've got more space for the trade to move in, and it doesn't cost that much because you've dollar costed in. And what you're looking for is position. You want to get position in your trade. If the price starts to go up, so let's say, let me put it back on the screen here. Let me put this screen back up. So that's the position, yeah. Putting money in the position. So now here is, let's say you go in on the trade here. And this the 5 minutes, yeah. Also the 15. It's going to spill out of the 15 soon. Let's say you go in here, and then price starts to go up. Well, if you've dollar costed in, let's say you put $500 here, yeah, 10x and $500 and it goes up to here. So you went in at 3,000, let's say 3,100, just for a simple figure, and it goes up to 3,000. Let's say 3,200 all the way up here, yeah, is what you can do is you can put in another 500, and when you do that, it pulls your entry point up. So normally, if you 500 in and you put another 500 in, so you're doubling, is normally what happens is that your entry point gets pulled up about 50% from. So let's say it goes in at 3,000. You went in at 3,100, 500, and it goes up to 3,200, and you put another 500 in when it hits 3,200. Your entry point originally was 3,100. Your new entry point will be closer to 3,150. So now it's pulled your entry point higher because you've loaded in, you've dollar costed in, and now price action's up at 3.2, your entry point is 3,150. And what that means is that when price action turns and starts coming down, you go back into the green sooner. So you don't have to wait for 3.1, you go back in the green at 3,150. So that's where dollar costing and being adaptable, you can put money in and it can bring your entry point back. If it's going the wrong way, your margin can pull your entry point and your stop loss nice and high so that you're well away from it. You're working on the arcs, so you know that, okay, you know this is going to break down. So it's not going to break. It's not going to break Skyline here. Is resistance peak here? It's not going to break that either. It may come up close to it, but it won't break it. And this is actually quite low here. This is you can see that. Yeah, this might have another. This might want to have another push up here. Yeah, but I think Mountain Peak is going to be pretty low here, just in the way price action is working now. Yeah, I think it's going to be pretty low. But anyway, does everybody get the strategy?
How did you do that? How did you, that 15-minute that you have there, how did you formulate that
But hang on a second. Let's close off. Let's close off what I just said, and then we can go on to that. Yeah.
Okay.
Does anybody have any questions on what was just described about the position margin, and then also dollar costing in, that it can move your price action. As price action moves, you can move your entry point, and then as it goes down and it goes your way, you can dollar cost in again, and you add in as you go down, and that will pull your entry point towards price action. So you want to make sure price action is moving far enough away before you dollar cost in, because what you don't want to do is dollar cost in. Let's say price action does this, okay, and you decide to dollar cost in, and you got your entry point here, you dollar cost in, and price action is here. When you dollar cost in, now your price action is here, and now price action is doing this, and you're like, oh, what the hell's going on? You need to wait long enough to let price action move away, and then dollar cost in. And what will happen there is it'll go down when the breakout happens. It'll go down in 3 stages, because it'll do an Elliott wave down, an impulse wave down, and you'll have the 1 spike, 2 spike, 3 spikes. Is let it do the first one, let it have its retrace. When it goes in, now you dollar cost in here, and your entry point was up here. Now your entry point is there, but price action is moving away. It's gonna do another sideways here. Look, and now it's spilling. So now you do another dollar cost in there, and it pulls your entry point down to there. But you're always leaving that space between your entry point and your dollar costing in. So that's the way to do it, yeah. And then you're hitting your target and you're taking profit. So that's the way. But you need to practice that on small amounts. It's a strategy, so practice a strategy in small amounts, and you got to test it out. It's better than loading up and waiting to go in on confirmation. So what I mean on that, I'll give you an example. Is here it is, does this thing, whatever it's going to do, breaks out, okay, comes back, does a retrace, then it breaks out again. Okay, so confirmation. So now you go in on confirmation. So now there's your entry point. So now the challenge with this is confirmation, great. But if it does this, which it can do, is it'll come up, it'll knock you out of your stop loss and come back down. So that can happen. And again, that this can be stressful. Is the strategy that we're getting you to do is here it is here. Wait till it does mountain peak. So let's say mountain peak is there. Is where do you go in on your trade? You go in your trade here, because you know it's mountain peak. Now it's turning. Go in your trade here. Let it come down. Let it do what it wants to do. And when it breaks out, you're already in the trade. You're not waiting for confirmation, because when you read the arcs and you read the confluence and you read the trend, you know it's breaking down. So this is when you go in. You don't wait for confirmation. You trade position, but you only trade that because of confluence. You have confidence in confluence. Okay, and that is the difference between a lot of pattern traders and just traders in general. Is if they don't understand the pattern, if they don't understand the continuity of the arcs, this is what most people don't understand. So it is understandable that they would go in and trade on confirmation of the breakout. Where the challenge there is this is where the smart money knows most people go in. This is why you get fake outs, before the breakouts. Is you get drops and you get retraces. Is all that volatility is always in and around where people will naturally go in on the confirmation. So when you're not going in here, but you're going in here, is you're avoiding that that trap, if that makes sense. But then you need to be confident of your position. You need to know the bigger story of what's going on. So that's where anybody who is long enough in the game is the pro traders will go in a different position than the newbies, and all the newbies will gather around confirmation, and all the pro traders, they'll either do one or two things. They'll either go in earlier and get the position, or what they'll do is they'll go in on confirmation, but they will pull their liquidation price up. They will pull they won't use stop losses. They'll use liquidation. They'll pull it up because they know it's going down, and they'll pull up their liquidation price so far but that they stay out of this battle. And anyone who doesn't know any better gets caught in the retrace here, or the fake outs. So, and they won't tell you that on YouTube because they can't. Because if they tell you that on YouTube, YouTube will block them, will ban them. They're not allowed to say that on YouTube, because again, it's think about somebody who's 5 minutes in it and then thinks, oh, I'll put money in my margin, I'll ram up my liquidation price, and then just gets absolutely wrecked. So they can't say it. They can't say it. So they're telling everybody to use stop losses, where really themselves they're not using stop losses. They pull away to avoid that battle. They know it's going to turn. They just don't get caught up in it. So there you go. Trailer, what were you going to ask?
No, that was amazing. It's like, no, I was going to ask about can you draw an Elliott wave on that last 15 minute? Because it's easy. I mean, it's easy for most of us to do the
this
the arc on the way up, but on the way down, that could be a challenge.
Yeah, the Elliott wave, you mean? Turn.
Yes.
If you turn it upside down, if you press.
How do you turn it upside down? Can you teach us that?
Option and I.
How do you do that on an iPad? Do you know?
Well, the same thing. Option.
You can't do it on an iPad. You can do it on the. Yeah, no, it's only the web browser desktop apps.
Okay.
Okay. There you go.
You could take a screenshot and flip your iPad upside down.
There you go. There you go.
You know what? I might do that.
There you go. Whatever works. Whatever works is.
How did you do that again?
Option and I. Option and I. Yeah. Now I'll just do this, and then I'll talk through what we said we were going to talk through tonight. Yeah. But there's the Elliott wave. But now look at this. I'm just going to put this here. Yeah. So here's a 0, 1, 2, and then you get the push away. So there's always the push away, and we're in the zone 3 zone, and then look when you get past. Normally, when you get past the second half of the 3 zone, you always get a W. You always get a W. Okay, and then after the W, you get scoops. You get these at least 3 scoops. 1, 2, 3, and then you get 4 and 5. So when you're following it, we can also use the fibs and measure it out. But now this is literally a visual. This is just your following with your eye, and your fibs can give you a good indication of where it's going to land. But it's getting close. It's getting close. Okay, so look, it's played out. It's W. Okay, then is this 3? Is this 4? Is this 5? Okay, well, it's done the W's, but where's the scoops? Well, the scoops haven't happened yet. Okay, you got to let the scoops come in. So it goes like, okay, 1, 2, there's 3 scoops. 3, maybe that's 3, maybe that's 4, maybe this is 5. Is maybe you got to check your fibs to see what they say. But now look at the size of this compared to this. So you got to measure. You can see the size of the movement. These are not the scoops because they're too small. So here's your W, here's a scoop, here's a scoop, and then here's a scoop. So you've got those three movements here. Here, how do you know for sure that it is? Because then when you start to get a proper retrace, so look at this. It retraced back to here, it came to here, and then it dropped. Now this tells you that's 4. So 3, 4, now you're heading up for 5. So you're always going to have that play out. Every single one of them will uniquely look a little different, but they will all have that as part of their pattern. Is on the go on.
This little thing that you did, that you came up with the arc system
Yeah.
of the mountaintop and
Yeah.
blow off top, is probably helped me the most. Second
Yeah.
would be the liquidation zones, but this is absolutely every person that ever learns trading needs to learn this.
It's one of those things where it's an open secret. It's an open. I don't know how everybody doesn't know about it, but I've never heard of anybody else talking about it. But maybe one of the closest things to it is the Wyckoff pattern. I think the only thing about the Wyckoff is it doesn't give enough detail, and it's viewed. I think it's viewed in a limited way. I'm not sure people realize that the Wyckoff is like the arcs. It plays out over all the time frames, so you can layer them. You can layer smaller ones within bigger ones. That goes on all the time. But it just doesn't seem to. The Wyckoff doesn't seem to go far enough in its description. And what I mean by that is that it's a continuous cycle. It's a continuous pattern that repeats itself over and over and over. That's not discussed about it. But anyway, so look at the W's. Is you need to get your W's. You need to get your 3 scoops. Then your 3, 4, 5. That's there all the time. Is if you don't see it, if you go, look, I can't really see it. And I'll show you now. We'll go to the hour. Maybe on the hour, it's not giving you the same refined detail where you go, I'm not seeing this. There's the W, but the scoops are, I'm used to reading them so I can see them, but it's like maybe it's not as much detail. Is you change the timeline, you go down to a level that you can read the finer detail. So the more candles you have, the more detail you get. And that's where you can start to see the scoops more clearly. So if you're looking at this and you're going, no, the W isn't here, that guy's talking nonsense. I'm not. Is just go down to a smaller time frame and look, and you'll see the detail. So if you're on the 5 minute, you might need to go down to the 1 minute to see this, or the 2 minute, and it will become clearer for you. Go, okay, there it is. So if you don't see it, that's what you do. So now why? Let's ask the question. Why isn't the Wyckoff seen as a continuous pattern, and that it's far more than what people think it is? Why isn't that recognized? And then the simple answer to that, this is quite a yogic thing, by the way, but a simple answer to that, and we talked about this before, is people are used to opposites. Is people are used to mentally viewing things. Did we have the conversation about mentally being centered? Did we have that we did. We did. Remember this conversation. This is why. Remember this conversation about the circle. So what's the and it's going to put a little dot in here. There we go. Okay. There we go. Okay, so now is, the question is, what is the opposite to the center of a circle? And again, most people will go, well, it's the radius. So this is the radius. So the opposite to the radius is the other side of the circle, the other radius. So that's the opposites. But what's the opposite to the center of a circle? Is the opposite to a center of a circle is the center of a circle. It doesn't have an opposite. So we're all learning this life to view things this way. So opposites. And that means separation. Two things are separate. So one is here and the other is there, and it's like a mirror image. And even mentally, when we look at ourselves, we're looking at the perceived image of ourselves. And we talk about, who am I? We look at the image we present, we say, that's who I am. Okay? And again, that's what people would say the ego is. The reflection is the ego. Where when you take the same question and you ask from the center, and you ask, who am I from the center, is now you're asking about your being. Who am I in my being? Who is my authentic self, my natural self? So there's no effort to make a reflection. There's just the being of oneself. So the natural nature of oneself. So who you are when you're making absolutely no effort at all in your most natural state, that's you right there, right in the center. That has no reflection. It's just a oneness, a state of being. So viewing from that place. So the world we live in is all about exchange. There's always transference. So for every action, there's an equal and opposite reaction. There's up and down. It goes up, it goes down. It goes left, it goes right. It's part of the way this world works. So it's very natural for us to put this here and look at the world from a place of separation, from two-ness rather than oneness. So, and in that is you can have the adversarial, and it's you against them against us, or you can be from the oneness and you're not for one side or another. There's just a wave pattern that moves up and down. It goes left and right, but you just go with it. Either way, you're looking to play the swings. Whatever way it is, you're playing the swings. So boat work. So now, why is the Wyckoff or the arcs not recognized more for what they are? Because you would have to look at it from here to understand that it's a continuous cycle, repeating itself over and over and over. And that no matter what time frame you look at, it's there at every level. This upsets people, I'm generalizing now, is this reflection here and here, is these two opposites. When a person gets used to it, and then you tell them, actually, there's no opposite, there's just this, and everything is all of this is one pattern going around and around and around. The ego doesn't like that, because what it's basically saying to the ego is that your reflection is wrong. Is there for you to be truly yourself is to be from here, and therefore there is no reflection. There's just oneness. So the ego doesn't like that, and the ego doesn't comprehend it, because the reflection only understands the reflection. The reflection only understands the reflection. When you take out the mirror, is the ego will tell itself it's asleep. It doesn't see it. It's like a blind spot. The ego will tell itself it's not there. Oh, I'm not there. Because it doesn't have the reflection to say, there I am. So now, that might sound like I'm being a bit critical of the ego. I'm not. Is the ego has a real value, and the real value is the ego allows us to live in this world, and to get by in this world, and also to learn. But what's the most valuable thing about the ego is when the ego can put the fight down. So when the ego puts the fight down, the ego stops fighting, and then what the ego does is that the ego surrenders itself to oneness. It doesn't fight it, it surrenders itself to it. So what is the biggest battle in all our lives? I've given you the answer, by the way. What's the biggest battle in all our lives? To put what down? What's the biggest fight you'll ever have in your life? It's not a trick question.
It's our ego. You just said it.
Yeah. And your biggest fight is not to fight. Your biggest battle is to not fight. So if you think about it, is that the less we fight with ourselves, or the less we fight with life, is what we do is we end up coming into that oneness in ourselves, and we work from there. Does it mean that you won't struggle? It does. You will struggle, because life is, there's no avoiding that. But we're better off doing it from a place of oneness and moving with that than trying to deal with life and fight ourselves at the same time. Because the fight we're having in this is with ourselves, and it always is. You can look out here and go, no, my fight is with this, it's with that, it's with this person, or it's with that institution, or it's with my money, or it's my relationships, and you can have as many different fights as you want, but really this here, that's the fight. So when we put this fight down, you'd be surprised at how many other fights that we put down, and that we come into a place where we're not fighting with ourselves. Now, does that mean that we become passive? No, absolutely not. What it means is you stand your ground. You don't move. There is no escape from here. There is no back door from here. This is exactly where you are. This is exactly who I am. And this is exactly what I'm focused on. So whatever I commit to, I'm fully in it. I'm 100% in it. So if you're 100% in it, then what's the most important thing you need to be aware of about the things you commit to? If anything you commit to, you do it 100%. What do you need to be careful about? It's not a trick question.
Sure, that's what you want to be committed to.
Exactly. Exactly. So you need to know what's most important to you. What are the things that are truly valuable to you? And all the things that are truly valuable to you, you're holding them in your center. And how many are there? There's not loads. There's not loads. There are a few, and they become very, very concentrated. And what you want is confluence between them. You want them all working together rather than against each other. So when you're 20 years of age, you'll say, oh, the world's my oyster. And absolutely, you want it to be your oyster. But what's the problem saying the world's your oyster when you're 50?
Not many years left.
Okay, and you're still giving yourself so many choices that what are you missing out on? The ones that are most important.
Okay.
Does that make sense? So as we get on in life, is the things that are truly most important to you is you need to recognize those, and then you need to bring them to your center and not fight with them. Because you can do two things. You can do it the way I'm describing, and I'll describe yoga. I'll describe it through yoga. Is a person is in a posture. You're making a shape. You're in a posture, and you're fighting your body while you're in the posture. So you're making a shape, and then while you're trying to make the shape, your body is really fighting against you, or you're forcing your body to be in a position. Well, there's two things you're doing. You're in the posture, and the posture is a metaphor for what's important in your life. You're in your relationship, you're in your career, you're in your community, is whatever that is. But then you're fighting your body, or your body's fighting you while you're in the posture. You're not doing one thing, you're doing two things. Is you're in the posture and you're fighting at the same time. If you come into your alignment, your center, if you come into your center, now you're not fighting. Now you're just in your body, and your body's in a posture. Is it strong? Yes, it is. Is it challenging? Yes, it is. Well, what do you need to do to hold your center? Well, if it's too intense, I need to pull back a little bit. I need to adjust. I need to modify. I need to adapt. I need to move to a position that I can hold steady. Then I need to open up into it and breathe into it. I need to focus my mind on it, and I need to stay on what I'm in, which is the posture, or whatever it is that you're focused on, and that you stay adaptable, and that you stay true to yourself in it, and you hold your ground. Why would you do that? Because it is that important to me. And there's not very many things that are important, but these things are elementally important. And these are the things that I rotate around. Essentially, this is my life. So that's what we're all, whether we realize it or not, that's what everybody's looking for. And do you still have an ego? Yes. Yes. This is the thing, is that you have an ego, but what's your ego when it's peaceful? Well, it's just yourself. It's just your natural sense of self. You still have an I, but you're at peace with it. So what happens to people call the ego the small I. So here's the small I looking at itself. When the barrier gets taken down, it's the big I. So you still have an ego. You still have your own sense of self. You still are you, but you're just at peace in yourself. So that's what we're all looking for. Whether we realize it or not, that's what everybody is looking for. You get financial freedom from your trading, but you're at war with yourself. You're still at war with yourself. You'll still be as miserable. You just have more money. So if you learn to trade, and use the same principles trading, that will actually give you peace of mind and show you where your center is while you're trading. And now you're double jobbing. now you're killing two birds with one stone, so to speak. And the way you trade could be the way you live. And then the way you trade is the way you live, is the way you deal with your relationships, the way you deal with your finances, is the way you engage with the world. Did everybody get that? Just as an idea?
Yes.
A principle? So really what my point there is that it's back to the arcs. Is there's a pattern to life. There's a way that it works. It ebbs and flows. And it layers through everything. So the arc pattern, and when you look at the fibs map out the exponential nature of life. Is life grows in spurts and troughs. It bursts and then it releases. It bursts and then it releases. The fibs measure that. The impulse waves are that pulse of life, like a heartbeat, like a breath. There's impulses and then there's a release. There's an impulse and then there's a release. Is the more you look at the arcs and the waves, you're literally just seeing the life flow through the pattern of price action that has its own life. And the more you attune to that, it becomes very natural just to see the arcs. So you see them with your eye. So, and you're really aligning yourself with price action and aligning yourself with the center of it.
A quick question for you, Roy. I absolutely, this is surprising to me how fractal all this is, and that it's these arcs. Actually, it's surprising to me. But the one thing where you say, like, the confluence, you have to find this confluence. This is the biggest question that I always ask myself is, the arc contains all of the price action, but is it going to go up or down? And I know you said find confluence in the larger time frames. I was just wondering if you could kind of show what you mean by that. I'm just a little ambiguous on that.
Yeah, absolutely. Yeah, here it is. Here is the blue triangle is the 4-hour arc. The red triangle is the 1-hour arc, and the yellow is the 15-minute. You get that?
Yes, sir. Yep.
Okay, so, excuse me. Here's Skyline on the 4 hour. Here's Skyline on this 1 hour, but on the 4 hour, it's resistance peak. I should put this here. So, so Skyline on the 4 hour, Skyline on the 1 hour. Are you with me?
Yep. Yep.
Resistance peak on the 4 hour, okay, and it happens to be resistance peak on the 1 hour, okay.
Gotcha.
So here is Skyline on the 15 minute. Do you get that?
Yeah. I'm trying to take them on. So the resistance peak.
Ignore these for now. Yeah. Ignore these for now. Yeah. So you see Skyline on the 4 hour?
Yeah.
Skyline on the hour? Skyline on the 15 minute. Because this 15
Skyline on the 15 minute, that you're actually further in, that you're talking about the yellow the yellow arc right there.
Yes, exactly, yes.
Now that's further in. It's not the beginning of it. It starts, I guess.
Wait, see now this. Yes, exactly. Look, this is coming in from.
So it's an inverse thing.
This one's coming in from the top. So this
gotcha.
This here would be a 15-minute arc as well. So it's coming in from the top, but this one starts at the bottom. So now it's 3 steps up, and there's Skyline there. Do you get that?
So it runs the same steps, but it runs it in inverse.
Yes, because there's more arcs. Like on the 15 minute, there's more of them in the 4 hour. So here's the 4 hour, the shape of the 4 hour, but the 15 minute is watch. Like we'll look at the shape of the 15 minute ones. Is this here? There we go. So look at the different shapes on the 15 minute. But look at the shape of the 4 hour. Do you understand?
Yeah. Gotcha. So it literally it points to where it's going to go.
Well, on this one it does, because you got that long drop down, so it creates an extremity on the. It creates a wedge, like a falling wedge on the.
Is it too simple to say that if price action enters at the top, then it will sit at the top, and then if it enters from the bottom of the arc, then it'll exit the bottom?
Yeah.
Is that too simple to say?
No. Great question. That's actually one of the things I wanted to talk about today. Is when price action comes in at the top, this is Skyline, and it comes down, it comes up. Comes down, you may have a smaller one, and then you can have a breakdown or a break up. So you've got the wave in, there's Skyline, third spike, mountain peak, third drop, final peak, final bounce, and it may decide to go up or down. Okay, that's when it comes in from the top. When it's coming in from the bottom, you have an extra leg. You have that. So now when it comes from the bottom, you've got to have your 3 steps up. There's Skyline. And then it comes down. And you're in the pattern.
Roy.
Hang on a sec. Before you ask another question, do you understand that? Did everybody get the difference? Does anybody not?
Yeah. I got it. I was just wondering, like, you know how you, like, it's where it could go either way at the end?
Yes.
How would you identify
Great.
which way it would go?
Great question. Well, here's a question for you. Is here we are on the 4 hour. Here's the hour. Here's the 15 minute. So within the hour, where this here, while this is Skyline on the hour, it's also Mountain Peak. It's Mountain Peak on, sorry, it's Mountain Peak on the hour. It's Skyline on the 15 minutes. If it's Mountain Peak on the hour, what direction is it going down?
Down.
Exactly. And now this is Skyline as well. So now while you've got Skyline on the 15, you've got Mountain Peak on the hour, is it's going to go down. So now when it hits the bottom here, is look, Mountain Peak on the hour is, excuse me, is it goes down for third drop, final peak, final bounce. But now this is also, we have Confluence on the 4 hour. So the 4 hour, this is also Mountain Peak on the 4 hour. You understand?
Yeah.
Okay. So now Mountain Peak on the 4 hour needs a third drop. Are you with me?
Yep. Yep.
So now we've had second drop, third drop on the hour, final peak, final bounce, but we haven't had third drop on the 4 hour yet.
Oh, gotcha. Okay.
You understand?
So you got to keep track. All right. So I got to keep track of basically 1, 2, 3, 4 levels deep of arcs from the 4 hour on down, and make sure that they all complete their steps.
Yes, exactly.
If any steps missing, then that's the direction it's going.
Yeah. So look, it going up here doesn't make sense on the 4 hour.
Yeah.
Does that make sense?
That clarifies a lot.
Yeah. Makes a huge difference. Difference.
That is huge.
So now you know it's going down because it has to. The 4 hour has to complete, and you'll have the daily as well. So the daily will do the same thing at times with the 4 hour. So that's the confluence. That's and the same with this here is, look, you're if this is resistance peak on the 4 hour, is okay, because look, here's a 4 hour and it broke down. So now here's a question for you. Here's a 4 hour. You see it broken out of the 4 hour. Now on the 4 hour, look, it broke down. Is that the 4 hour complete? Look at the size. Look at the size of this 4 hour. Now it's after spilling out, or after breaking down. Is this the end of the 4 hour? No. It's just the first leg of the 4 hour. So look, but this is an hour. This hour arc, what does the 4 hour tell you about this hour arc when it finishes? Is it going up or down?
Down.
Down. Because you've got the break of the 4 hour, you know that this has gone down further. If anything, you could put a fib on it. And look for a measurement. And we look at a 1618. And we're looking at 2545. So you know that this is going to break down to somewhere around there. So now you're on your trading your hour, and you're looking at your hour and you go, geez, is this going to go up or down? No, the 4 hour is telling you it's going to go down. And this is just the first drop, so the second drop is always the biggest one. So the second drop is where you're going to get the bigger drop. So you know this is going to be a bigger one. But is it going up or down? You know it's going down. You know that there's more volatility in this one, but eventually it'll find its way down. And again, there's lots of sideways in this as well. So So you get what I mean about Confluence?
Yeah, absolutely. Now, with the first drop, second drop, third drop, is the first drop the deepest, second is kind of middle, and the third drop is in between second and first?
Yeah.
Is that always?
Let's have a look at that in a moment. I'm going to bring Trailer back in. Trailer, you had a question there.
Yeah, I mean, you answered a good bit of it with the last question. You covered it. Michaela went over some of this the last one of the couple sessions ago, and it was great. I mean, really detailed. And I was working half the time, and I didn't get. And unfortunately, the recording didn't come through.
Yeah.
But it would be really good if we could just have a whole session just on this amazing, incredible. What you're doing right now, so that more of the new people and including me could learn more about this. Because like for instance, take your 4 hour, go up to the top of the Skyline right there. Go take your 4 hour, move your mouse to the top of the Skyline, and then move over to the left where it says C. And I'm trying to understand, this is where I'm having trouble. How is that the bottom? How is that the bottom of the last 4 hour arc?
This here. See here.
I can't see your mouse. I can't see your. Are you moving?
Oh, sorry. I reduced the screen a bit. So there's the Skyline.
Yeah. Now move to the left.
Yeah, to see here.
No,
yeah?
no, to the left. Right
sorry.
there.
My apologies.
Now, how is that the end of that last arc?
Yeah, great question. Okay, so let me your should be here actually. So do you see here? This is the beginning of the next of the 4 hour here, yeah. So you're asking about this,
yes, which is almost the same level, same height,
yeah.
And so, I mean, I think on the way up, I'm not going to have as much trouble, but on the way down, I'm having a lot of trouble.
Yeah. What are you asking again?
Well, that C, which should be the I guess the very bottom of the 4 hour, should technically be lower than the Skyline of the next 4 hour. And I was just trying to understand how that is the bottom of the 4 hour.
But it's not. It's here's the bottom of the 4 hour, and there's the bottom of the 4 hour.
So your new triangle, it starts at the Skyline.
Yeah.
As the breakout, right?
Yes. Yeah. Exactly. Yes. Yeah. Exactly. The well, officially the breakout is when it breaks out here. Yeah. Like that's breaking out is here because it's breaking out of the arc. Yeah. So
but your Skyline on the next 4. Oh, I see what you're saying. So you're saying the breakout is at the bottom, and that really ends the first 4 hour triangle. Okay.
Now I get what you're asking. Yes, but now you remember it's a continuous pattern trailer, so you always have the transition where one arc hands over to the next arc, so that they're not. Remember, it's only one pattern repeating itself over and over and over. There are no gaps. There's not one moment in price action. And again, some people will struggle with me saying this because it's in this here, there are no gaps. There's no gaps. There's nothing in between. So price action, there's not one moment where there's a gap between them. There's no separation of them. But there is a transition where one transitions to the next. So while this here is part of this one completing, it's also the beginning of this one. It's a bit like Inception. This is the moment of inception, you know. Is it just keeps getting passed on? You understand?
I got it. Yes, sir.
Yeah.
I got it.
Well,
I understand now.
Oh, there you go. So there's a continuous. It's like DNA. At what point between ourselves and our previous generations was there this true difference or gap? Didn't happen. It's continuous. So same thing. Yeah.
Yeah. See, I would have made. This is where I'm having trouble with this triangulation. I mean, triangle.
Yeah.
I would have made. See where it says B on your little 15-minute.
Down here.
Where you start. No. Go back to where you were originally. I'm still in that one area.
Okay.
Take Skyline. Go all the way down to where it says B.
Yeah.
See, it says A. I would have made that as the bottom of the 4-hour because that's the lowest point, or that's lower than midway in your 4-hour.
Yeah.
So
yeah, I hear what you're saying. Yeah.
And that's where I'm struggling. That's right there. Yeah. See, that's kind of what I would have done, but
yeah,
but that doesn't make sense because if you start the new 4-hour where you have it now, that makes sense. But
yeah,
that lower point, because you're going up, right? You on your 4-hour, this first 4-hour, you're actually going up to the Skyline, or C is equal to A, and so that's why I'm trying to figure this out.
yeah, absolutely. What you're looking for is look, we're coming down here. And then you're looking for the 1, you're looking for the 2, here's a small 3, is if you went into this, is you're stretching that process out. Does that make sense? So
yes, and plus it skews all your next Skyline, mountaintop, resistance peak, the whole thing.
Yeah.
If I moved it over. Yeah.
So you can see how the 1, the 2, maybe even a small one, but what you don't want is 1, 2, 3, 4. It just drags on. Does that make sense? So
yes, but I guess in my mind, I always thought the lowest point of the 4-hour arc would be lower than, the midway or whatever, and that's where I'm struggling.
Yeah. And trailer, it's not always easy to tell, and you gotta you like I reset my arcs all the time. I reset them all the time. There are times when I'll do this, and maybe there's times when I'll do that, depending on the way it's playing out, And then when I see this one playing out, I go, oh no, I have to reset. This was actually the first drop, second drop, and then the first spike, second spike, third spike. I've got to reset myself. So sometimes it's not so easy. It's not so obvious, and there's sometimes a little bit of hindsight. So that's why the confluence makes it really important. The confluence to double check all the time, and even with the 4-hour and then the daily, because the daily gives you more information. So look, here's my 4 hours. And then here's my daily. So now, what's my daily telling me about this arc?
Heading for third spike.
Exactly. So now my daily is telling me. So now that helps me measure out my arc. You understand?
Oh, I see what you're saying. Okay.
Yeah. So now
Okay.
my 4 hours getting Confluence with my daily. My
So
hours. Go on.
you have to look at the daily. So okay. I was trying to get away with just the 4 hour and the 1 hour, but I see what you're saying. The daily is definitely going to help you with that.
Well, yeah. That will work for you until you're. I see you can play out there. Until it'll work out for you until the bigger time frame takes over and you don't realize. Like it's the same now with price action. Why is the 1 hour going into the oversold and staying there a little bit longer than normal? Because normally the 1 hour will go to the bottom, might go into a little oversold, then come out of it. Why is it going in and staying there longer? Is because the bigger time frames are in control. Is the multi-day, the 1 day, the 3 day, the 5 day, the MAs within those are in more control. They're putting more pressure on, because in the arcs, the 1 day and the weekly, they're coming to their completion. So they're putting a lot of weight into it until they are complete, and then there'll be the pump up. And why is the pump going to be so strong when it comes in? Because the ABC correction isn't just correcting on a 15-minute or correcting on an hour. You're talking about a daily arc and a weekly arc. So a weekly arc is a year long. So think about price action going on for a year, and that its correction is coming to an end. So the bottom of this bear trend now is the end of a weekly arc and the beginning of a new weekly arc for the next year. So think about the pump that we're going to get from the breakout of this weekly arc. It's going to be far bigger than a 15 or an hour.
You're getting us excited.
Yeah, well, there you go. There you go. So, but you can see also why price action is being held down longer now, and you're looking at the 1 hour going, Jesus, when is this it's going into the oversold, and the RSIs are getting a bit tricky, because the 5 day, the 5 MA and the 10 MA on the 5 day is coming down like a hammer. It's not very often that the 5 day would be the pressure would be so immediate, would be so strong on it, because it's those bigger waves coming to their completion. And until they all complete themselves, we won't have the breakout. So there you go. That's where the confluence makes a big difference. So yeah, it takes a bit of time to get your head around it. But it's one of those things, once the pennies begin to drop with it, is your consistency of your trading, it goes through the roof. And you'll have a greater confidence to go in on the style of trading that we're showing you, and you'll have a confidence to go in on bigger trades and longer trades. You can still do your daily trades, but it's very nice to have your daily trades and also have your weekly trades, have your monthly trades. Like, it's not like I don't do dailies. It's just I'm sticking with this one, the one I'm in now. I'm sticking with it because I'm just staying in the pocket with it. I really want to crack it. But now on the pump is I'll do my long trades, and I'll go back and I'll do some daily swing trades. I'll do both. But for this one, I'm going for the biggie, and I want to stay in that. I don't want to get distracted doing smaller trades during the day as well, because it interferes with my focus with the one I'm trying to crack. So that's where I am in my own development, my own trading at the moment. So that's it. So I'll be back to doing more day trades now when this one does its thing, So listen, I'm going to finish tonight now because it's 11:30. But what I'm going to do is I'm going to come back to this tomorrow, and I'm going to start with this conversation where I'm going to talk through Skyline, Resistance Peak. I'm going to talk through them all in detail, and then talk about how to read them and how to map them out more clearly. And we'll go through it, so that what I would love for you guys to get over the next while is that you can read it with your eye. You can read an arc. You can read the price pattern with your eye. You can see the arc in it, and then you can just put a triangle in it, and then you can map out. You can see exactly where it is within the story, and that's a very good thing to have. And then you can put in your points if you want, but you can read it with your eye as well. So now what you'll notice that I'm doing here, I've got the 15, I've got the hour, and I got the 4 hour. And then I'm mapping out the 4 hour. So all these indicators, all these maps here, these are the 4 hour story. So I'm telling the 4 hour story, but I have layered in. I've got layered in my hour and my 15 minute, so that I'm able to hold all this in my mind at the same time. I'm holding these different timelines in my mind at the same time. I'm using these triangles as a reference point. So my mind mapping is able to hold all this, and then I'm following the 4 hour story within it. So that's what I want. I'm working up to get all you guys to be able to do the same thing. So, but there you go.
Thank you.
Yeah, you're very welcome. Take a bit of time, but the consistency and the confluence is when those things come in more and more. Then it's just a matter of traversing the environment, is knowing how to play the bear trend, the bull trend, and then the transitions. So learn how to trade it down, learn how to trade it up, and when it's in the transitions, trade the transitions as well. And then I would suggest then if you can do all that, I think you're at a pro level of trading, because you've got the consistency. You'll be part of the 10% who will get the big wins. So that's what we're looking for. And then ultimately, I'd love to just build up a community of traders who we all trade together. We all are trading at the level we want, but we're all following the same system. And then uniquely, we all have our own different ways with the indicators, but we have the fundamental backbone that we all understand. So we're seeing what's really going on, and then we all have our own little way of doing the indicators to help map it out. And that's the uniqueness of each of us as individuals and what works best for us. But we all have a backbone that we can communicate with and trade with successfully. So we all know what we're talking about, and we all get to recognize the little nuances that we all bring, and that adds to all our trading. So that's it. I have an idea, by the way. Last thing I'm going to say, I was texting Matt there this morning because price action was moving a little bit, and I was like, Matt, wake up, because I know Matt's in Florida, so the middle of the night, and I was like, Jesus, this looks like going to break out. I was like, Matt, wake up, it might be good if we have if we set up like a Telegram group or something, and specifically for
absolutely,
yes,
great,
specifically for trade alerts. And just for when price action is properly moving, if there's a breakout coming, is literally just have our group for if I'm watching it and I'm in Ireland and I'm like, I can see it's breaking out, and I know I don't necessarily know what you're in. I don't know what your trades are, but if it's breaking to the upside or the downside, I know it's going to be relevant to you. So sending a little message, just saying, look, breakout. And equally for me, if it's 4 o'clock in the middle of the morning and I'm asleep, I would want a message for somebody to say, listen, it's breaking out, go check your trade. So I think that would be...
that was great. Actually, that happened to me. I had Insamo, who's in the group.
Yeah.
He called me or texted me at 3 a.m. There was a breakout.
It's breaking
and I'm telling
out!
you, I saved a lot of money, made some money because of that one text.
Yeah.
So, yes.
Yeah, I think that's a great idea.
Good idea.
Yeah. Okay. Well, then let's do that tomorrow. what I'll do is or do you know what? Well, no, I'll write it about tomorrow. But DM me your no, I won't. No, you don't need to DM me. I will give you my number. I'll set up the group. I'll give you my number, and then you guys can come on and just join the group, and we'll do it that way. There you go. There you go. Okay, let me set that up tomorrow, and then we'll talk through what's the best way to make it work.
Last night, that notification, Roy. Thank you. It really did help last night. So thank you very much.
The one I posted. Yes, yeah. Well, that's the same idea. Yeah.
I jumped out of bed. I ran to my computer. It was just in time.
Very good.
Thank
Very
you.
good. Yeah. I think as a group it would be super. So, all right, guys. You're very welcome. I'll see you all tomorrow.
Cheers, Roy.
All right.
Thank you.
Keep well. Bye bye.
Good night. Get
Night.
some sleep, Roy. Get some sleep.
I will.
Thank you.
All right. Cheers.
Thank you.